I bought close to $10,000 worth of Bitmine yesterday, as you can see here. If you are a shareholder of Bitmine, the next 2 weeks can be still volatile, but then we should be ready for Bitmine at $100. Let's dive in.
Welcome to the game, I'm the wolf of Dubai.
Welcome to a brand new video. If you don't know who I am, my name is Danny and I'm the most watched stock market YouTuber from the Middle East. I'm looking for stocks that I can be early on, and this is what I did for Tesla, Nvidia, Robinhood, and stocks like Palantir. Okay, I invested into $17 Tesla, I averaged down, and then the rest is obviously history. Even my subscribers and my followers bought houses and apartments in the US, so you should be following me here on X as well as on YouTube. Both of my channels are important, so you don't miss any video that we make every single day on Bitmine. I also never advertise any other product, even when they offer me $10,000, $20,000, $30,000 for videos. I only talk about my own product, which is X10 Day Trading, which is a group where we trade for you. We have a professional team of day traders and we send you all the trades all automatically with our software that looks like that. Very simple. You just switch it on. Everything is done for you into your own portfolio. And we want to average about like 8 to 15% per month. So your account from $10,000 should grow somewhere to $58,000, as you can see here. And I would love to dive directly in why October is so volatile. Okay, I said it many times, the volatility in October is brutal sometimes. And then you have obviously every single news that is coming out there. Doesn't matter if it's a Trump tweet or something else. Like, for example, now there's fears and worries in the markets that regional banks have some issues with bad loans. Okay, this was the story of the last couple of days, and obviously it's pressuring all the stocks on the market, specifically when algorithms trade on the markets. They know, okay, October usually is a weak month, so we take risk off. We have also very, very high levels right now on the stock market, so it's normal that in the worst months, after a fantastic September and a fantastic 10 days of October, that there is some volatility. But this, if you're a long-term investor, you will be very grateful, because this will be the last time that we see Bitmine at $50, $45, maybe even $40, okay? And I have seen on X a little bit some technicals that are underlying this, okay? Let's dive first into that. So you can see here that I have seen that many times over again. BMNR, we have a broken symmetrical triangle set up for next week. Initially, you want this regain the triangle, although measured moves from here are the lows 40s if you want to be technically correct first, okay? So you can see that we have this chart pattern where actually we kind of perfectly fit in over the last days, and then on Friday we had, or the last couple of days, we had like a breakdown to the lower side. So you can see here we revisit the 49.85s, okay? And if you are correctly, then you should see first 40s. So now it's the last couple of, I would say, like 2 weeks before we really can rally into the end of the year. And my price target is somewhere here, similar to this gentleman here, where we can see like hundreds. My personal target would be 250, but this obviously depends what is happening with the Fed at the end of the month. They might cut again rates. That would be bullish, and that would be perfect for the seasonality to the end of the year, okay? There's also, depending what happens on Monday, we will see some regional banks showing their earnings, and if they say, hey, be caution, this could bring some more pressure to the market, okay? Other than that, here's myself. But other than that, you see that other technicals also show that somewhere here should be the bottom. So I would do the following. If you are, and we're diving into a clip of Tom Lee in a second, that, he is always on CNBC and comforting the whole market and us, obviously, as investors. But I think that what is important is always have an overview as a long-term investor over the next couple of years, okay? If you buy now Bitmine and you think, well, they will stack, which Tom Lee confirms in another video that I just posted, that they want to release the staking strategy very, very soon. Then you have the end of the year rally. Then you have the seasonality showing us that the October will end, quite nicely with the beginning of November, should be more bullish. And then you have, more announcement of holdings. And I think that Bitmine is actually acquiring a lot of new Ethereums at this levels. Okay. I think that they showed at the last time they offered the news about the holdings, then you have seen that they used the most of the cash already because they think that Ethereum here is very, very cheap under 4,000. So if Ethereum goes up, the Fed cuts rates, we're going into the great seasonality, then you should see a Bitmine at 100. Okay, at least this is my base case. My bull case is rather 250 with like really, really Ethereum exploding and the seasonality on the market, because everyone wants to see the markets at all-time highs at 7,000 or maybe 8,000 of in the S&P 500. So let's dive in what Tom Lee is actually saying and how he is comforting us, because you can be sure at all times when the market is in turmoil, then Tom Lee comes out with a little bit of, comforting us.
It's good to see you joining us from the nation's capital today. So what's your take on everything that we are talking about now daily?
Well, I heard the earlier segment, Scott, and I do think I'm kind of more in the Jamie Dimon camp, that and Steve Leisman's point that there's opacity in private credit, and that's the problem that investors are going to grapple with for some time. And I think that, along with the trade tensions and the VIX spike, is the reason investors are a little cautious. But I don't think that's going to change that markets still have a lot of tailwinds into year end. And part of it is AI is like, I think demand is accelerating there. And we know that investors are sitting on a lot of cash, and institutional investors are really having a terrible year. Only 22% are beating the benchmark. So I think there's a bit of a chase. And then sentiment has flipped negative, which is always a contrarian buy signal. So, I think despite this mounting wall of worries, including the shutdown, I think it sets us up for a pretty good rally into the end of the year.
It sounds, though, like this is enough on your radar that do you think it's at least changed the game in the near term for the market?
On the private credit?
Just overall, I mean, if there are continued issues in private credit and the leveraged loan market, then the stock market's not going to take that well. I mean, you wouldn't think.
Yeah, I mean, Scott, the only thing that I don't know is how many chapters it's going to take to play out, because there's opacity, which is what is scaring people, but then there's real credit deterioration, which I don't think that's what's happening, and I think that's why Adam and all those had called it idiosyncratic. I'm kind of in that camp because high yield spreads have behaved. So I think it's more of is the flow of capital, because I think one of the biggest sort of allocations for alternatives has been private credit. It's going to make investors pause that, maybe this market it's not as easy a return as it looks.
You told me, I think, a couple of weeks ago that 7,000 on the S&P by the end of the year was realistic. You still think that we could get another 5%? That's what it looks like. It's 5% between now and then. Do we have that in us?
Scott, I mean, 5% is just an average fourth quarter from 1950 to 2024. But we have the Fed easing after an extended pause. So that's 1998 and 2024. So I think that 5% might be the base case. I bet you it's going to end up being more like 7 or 8% or even possibly 10%. So I think 7,000 is the low end of what we can end the year at.
Wow. And how much do earnings have to do with that?
I mean, earnings are going to matter, but it's been a good start. I mean, we're barely into earnings season. The banks have been good. 82% of companies are beating. There's a lot more visibility of demand and then less concerns about tariffs because we're kind of working our way through it. So companies have a better sort of visibility over the next 12 months. I think the outlooks are going to be good, and I think that's going to help stocks. And I think there's a lot of room for multiples to still expand. So I don't think this market's that demanding.
I think it's interesting that you suggest that you'd be a buyer of regional banks and small caps. Why are
Yes.
you willing to do that? That's not putting your toe in the water. That's like putting the bathing suit on and jumping in. Why?
Well, I mean, Scott, I know there's a lot of muscle memory for people from 2023, and that was because of a big change in rates that really caught a lot of banks offside just in their business model. That doesn't mean that this crisis, which is underwriting being done properly, should have the same issue. So I think that there has been a throw the baby with the bathwater out on the regional banks and the small caps. So yes, I think despite the fact that the Russell had a rough week, I think they're really going to be one of the beneficiaries. I mean, even on earnings basis, small cap earnings are going to grow 48% in the third quarter. That's like 4 times, 5 times bigger than the S&P. So I think there's still a lot of growth left there.
What's the message in crypto right now, Tom? Bitcoin is down today. It's 107,000 right now. What's going on there?
I think there's a couple of things. One is there was a big deleveraging last week because that VIX spike and the tariff headlines triggered the biggest liquidation and deleveraging in crypto ever in history. So I think that people are still licking their wounds. And I think that there's also a bit of gold envy because, as you know, gold has been a huge performer this year. In fact, there's people waiting in line to buy gold. So I think that there is a bit of like, I'd rather own gold than crypto. So I think this is not the top of the crypto cycle, but I think leveraged longs in crypto are near record lows. So I think it's kind of like we're at the basement and working our way back up.
Okay. We'll see if we get there and if we're walking or taking an elevator. Tom, thanks. Enjoy the weekend, Tom Lee.
So as you can see, Tom Lee is also, thinking that the volatility should end somewhere here. And when they talk about short terms, it means like on the markets, like 1 or 2 weeks. Okay. So consider that. Also remember that we had a volatile week. Usually a market bottom doesn't happen on a Friday. It usually happens on a Monday. So maybe this Monday, if the regional banks are saying, hey, we are good with the credits, then this should be also waved away together with the meeting of Trump with Xi, the president of China, and also putting all tariff talks to the side. I think this is a fantastic setup. So the next 2 weeks should be really focused on accumulating Bitmine. This is what I'm doing. I bought close to $10,000 worth of Bitmine yesterday, as you can see here. So you can see I'm fully bullish. I'm buying every single day at this levels because I'm buying a 500 stock for just $49 or $50 right now. This is the mindset, guys. Okay. So let me know what you think. Subscribe to both my channels and to X, and also share this video to all that are invested or want to be invested into Bitmine to comfort them a little bit. And I see you tomorrow because the grass is always greener on the other side.